But good morning to everybody that made it. Hope you guys had a good Friday. So just backing up, we're just going to start with the weekly and then just kind of work our way down and talk about like higher time frame analysis and then going down into like the hourly, 15-minute, whatnot. So in the chat, um, I was talking about, okay, what are the possibility of candles that we could have right here? And it was like we can have one that comes straight up and closes through, and the weekly finishes off like this. And so that would be like a breakaway gap scenario through the all-time highs. So then we would be looking at the next weekly candle to wick back down into here and then continue higher. Then we had, this was the other scenario. We wick and withdraw. Okay, so just wicking the high, almost creating like a equal high on the weekly. And then there was the, if we get a major rejection. So then that would be more like we finish with a down close candle. And it forms like a hammer like that, but it's down close. So that's showing like rejecting the all-time highs, and then price is now pushing down. So really kind of giving that bearish activity. Um, so when the weekly candles are forming and we're looking at what to expect, okay, we're looking at areas of liquidity taken and then how do the candles react around that area. And we'll look at examples like I said on the lower time frame, and you just keep that same concept in mind. It's going to be a little bit different because it's higher time frame, and so the lower time frame can be a little cleaner because it happens over and over and over again compared to like the weekly. But if we look at these equal lows on the weekly, okay, we have a week that closes but doesn't take this. And then we have a week that closes and takes this liquidity. Okay, these lows are resting here, and then a fair value gap. And then the very next week, this candle closes above both those down close candles. So essentially forming an order block. And so I would expect this next candle to dip somewhere into this candle. You would like to see the body get tapped. Okay, but it just comes up short, which is fine, but we're expecting any retracement. So we'd be looking for PD arrays in here that would be a target for price to just dip down into and reject out of. And then we get the subsequent weeks where we start reaching for this high over here. Okay, and it doesn't quite get there. This is the like November, okay, December, and we start getting to December. And now we get a strong candle through. Okay, so this is one of the scenarios that you're thinking about when you have an intermediate high. So these areas that are put in where you get these like a 3 bar high or low are going to be points of interest. So you really want to pay attention to what the candle body does in relationship to these areas. So here's another good one. We get a 3 bar high, a 3 bar low, it comes all the way back up. How does price react here? It doesn't form a breakaway gap, but it comes down to it, wicks it, and then kind of comes back up. Okay, so these are the little things that, like, if you pay attention to on the lower time frames, you'll see what should happen next. And so as we were climbing up, we get a breakaway through here, come back up into a weekly fair value gap, retrace. Okay, and look at the candle bodies of the week. Okay, old highs become support while the objective is still rolling out, which was all-time highs. Okay, so we're expecting when this starts slowing down and we start getting these smaller candles, and look how that times out perfectly. It's the holiday week. We should be expecting a retracement. And so now we're looking for, again, when these, after this week finishes, we're looking for some sort of manipulation lower, and then at least 50% this candle body should close above. Doesn't quite close all the way above. Could have closed all the way above. Doesn't, but enough that now this next candle, like we wanted to see here, I want to see a dip. I want to see this week wick into this candle body and move higher. And then we get our three uh, the 3 bullish weeks after we put in this down close candle. Okay, so then if we just look at this on the daily, and we look at the days of the week, okay, so we have our old high over there. We have that marked out. Here's this area of consolidation. Here's that an old high. And then we have a fair value gap right here with liquidity resting below and in this fair value gap. So this is, we're looking at when we mark these areas and say, okay, well, price should return to there and use that as support. Well, then what's going to be the area of liquidity that price gathers in? And so now we start marking these areas and referencing them on lower time frame. Okay, so our down close candle, the weekly, Friday, Thursday, Wednesday, Tuesday. Okay, so here's that Christmas week. Here's that short week. Just Tuesday comes up, gets ran. Okay, closes. So that's that little doji candle on the week. Okay, here's our order block. Tuesday, Wednesday, Thursday, Friday. So Tuesday high of week. Friday dips into the liquidity. So see where this candle stopped and see what we're looking at for areas of liquidity. Friday dips in there and look at the reaction we get. Okay, and then next week we should see a bullish week. So if this is Tuesday, just hide this for now. Okay, we don't know that. We don't know that yet, but let's say we didn't know where price was going. Here's your weekly candle. Dun, dun, dun. No, I want 50%. Okay. Here's the start of the next week after our order block. So if we look at that and we measure that, and we can go where Friday closes. So Friday closes right here, and this was the open Tuesday. So look what Monday does. Monday immediately closes above 50% of the weekly candle previous. Okay, so it's already showing, and it gives one more run in that area of liquidity that we're looking at, and then our previous high. Look at where that candle body opens. It opens almost exactly at this previous high. Okay, that's the start of the week. And this close, we have a new week opening gap right here, exactly where this level's at. Manipulates down back into here, and then closes above 50% of the previous week. Okay, so that's on a weekly basis, that's what we would be expecting for the week to start to happen. And then we get a Thursday high, and Friday just gives a little inside range. Okay, finishes the week pretty much at the same level that Thursday opened at, identical. Okay, so now we're in this daily. If we're looking at this as, oh, well, is this a bearish order block? And the reason why I'm saying this is because a lot of really good setups stem from liquidity being taken, that candle's high being ran or low being ran, and then closing below it. Okay, so if I was to look at this and say, oh, well, this looks like it could be a bearish order block. Oh man, we're getting rejection from the 50% area. Candle bodies are closing outside of the order block. We're not closing in it. Oh, this candle body just closes in it, so maybe it's the candle body's running the liquidity right here. What we have to remember is that the previous week is setting up for a bullish scenario, and we still have our eyes on the all-time highs. The algorithm is designed to give you setups that are opposite of where the higher time frame draw is to get people out of position. So it's going to give you a setup that looks bearish because it needs to get people out of position. And so that's when you take what the draw is and look how the higher time frame set up. Well, that weekly closed above 50%, so we're still bullish. So then what do I want to see on the daily before we continue bullish? Okay, and what we had marked out here earlier was a daily order block. So the fact that these candles came down, ran liquidity, took all the liquidity of this fair value gap, okay, and then had another candle come down, take even more liquidity, and then took the liquidity of this candle and this fair value gap, okay, after these ran liquidity, and then closed above both these two, then what we should see is price return to this candle and reject, okay, which we end up getting. So this is when we can see how we're going to start setting up our bullish entries. We should be expecting this. And for those that are, playing options, if you're taking SPY or QQQ options, this is where you want to get into your calls. Because once we know that price returns to an order block, what should we see next? We should see expansion. Okay, and then we get expansion all the way to the all-time highs. What else did this candle do? Okay, it ran liquidity, a couple pieces of liquidity back into this order block, closes, then we get the little manipulation back into this wick, and then it closes above. Okay, we're not expecting price to come all the way back down here because look at what kind of high we have here. This is another intermediate high. And so what we want to see is when it comes to intermediate highs and lows, price is going to do only three things. We're either going to expand through it and we're forming a breakaway gap in that moment in time. We're wicking it and closing, but still closing green. Example, this weekly candle. Or we're wicking it and we're showing a hard rejection, so we're closing as a down close candle. So with that framework in mind, think about what you want to see price do. And if we're reaching for all-time highs, I want to see price open and I want to see it jam up. I want to see a breakaway gap formed here. So if we're forming a breakaway gap, this should be a large green candle. Okay. Sometimes they form like this, where it's not like a true breakaway gap, but you have this intermediate high and price will come up to it. Order flow is still bullish, but we still get a large green candle straight through this high. Because anyone with stops, with buy stops, because they're in a short position, this is going to completely jam through it and then continue up and not give them an opportunity to change positions. They're just going to be stopped out. And so we can look at that. You can see it more on the lower time frame fractals. But if you look at all these different swing highs and swing lows, okay, that are like intermediate, that create this like definite, like the basically the like pyramids or like real defined points. Just look how price reacts around it. Here's an example of price driving through there, coming all the way down to this order block. Okay, you have ones over here where, oh, here's an example, it wicks it because it's still gathering shorts, and then it drives through, taking out all these. So if you just like study those, the way price reacts around these types of highs and lows, it's gonna help you make determinations on what the possibilities could be for other ones. And so this was just another one that we were looking at. All right, so we wicked the all-time high on the weekly. Here's how the daily formed. Kind of get this inside candle body and then movement down, but we don't really come back down into this fair value gap quite yet. And so when I see this pattern, it just starts reminding me of other patterns that are like that. Okay, all these major points like that. And so then I want to start thinking about, well, what are the possible scenarios of price to do when it forms these patterns? And so we have just a few options again. So price is either going to leave this as a intermediate high with relative equal highs for the time being. And so we would see price come back up into this candle body, maybe this imbalance up here again, although we grab this imbalance with this candle. So maybe back up into this candle body and then continue lower. And then we want to see how we start reacting in this area. Here's our next bearish draw on liquidity right here, this low. Okay, we have a daily order block sitting back down here. We have another fair value gap, okay, with the intermediate high. So do we see price come back down here and reject, maybe run lower, and then come back up and continue with higher price action, which is possible. So let's say this is a bullish order block just in the formation. I might want to see, depending on what kind of news events we have popping up in the next couple weeks, I might want to see another down close candle in here that runs this liquidity, and then the next candle runs that candle's low, but then closes above it. So that would signify kind of that reversal pattern. That's what I would need to see to expect higher prices. So we'll bump down to the hourly because now we can start taking a look at more examples of the price delivery fractals. All right. So yesterday's price action, okay, so far we have bearish order flow. We create the high above all-time highs, up, candle body closes below, looking for price to return here. And what do we do right here? Okay, cool. We 1, 2, reject. Okay, candle body closes below these candle bodies. Okay, so this grabs liquidity. Notice how this was forming. Takes liquidity from this order block and then closes below. So now we're forming order blocks. Okay. This is your initial run back up into this order block. However, I would like to see price run back up into here, but it might not, because this might be just a fractal of retracement. And so when the higher time frame order flow, like we could have retracements in on the daily, and the higher time frame order flow could still be bullish. We're just in a retracement. So that's where, just because the dailies retracing or the weeklies retracing, like the monthly could still be bullish. So you're going to have retracements, or it's going to rebalance and grab old liquidity. So just because we don't come back up here and reject this, that doesn't mean that like, oh, okay, this is now bearish order flow, or we don't want to change our bias. If I was gonna get a short position to play a retracement, yes, I would like to see price come back up here. I'd like to see this high get ran. I'd like to see price come back up into this order block, and I'd like to find somewhere in here on a lower time frame And we got a high right here, probably on the 15-minute, that I'd like to look for a short position. It doesn't have to do that. So the last day we get this, again, we're just getting these retracements up, but then we're getting candle bodies that close either all the way through or almost all the way through right here. Okay, that was the end of day. So it just almost gets there. But what does it do? It gaps down. So price was already expected to go lower. Okay, so now we're looking at order flow over here. Where is price reaching for? And we kind of have some interesting price action over here because if we look at, okay, well, what candles took liquidity? Well, this hourly candle took liquidity. Okay, it ran all these lows. It ran this low over here. Okay, which was relative equal lows. And then we get a good rejection up. So is this just a first high put in and then we're going to see price being held right here and then higher highs? I was hoping to see price run back up into this area and take out this high. So on the 4-hour, there's an order block right here. And I'm switching through different time frames because sometimes the setup is just a little more clear on different time frames. Okay, so when I go to the 4-hour, we have liquidity ran, comes down here, runs this low. This runs the low of this that took liquidity and closes above 50% of this, and then price moves away. So this looks like a solid 4-hour order block. Like this would be high probable. I actually wanted to see, you had this low right here. Let me unlock this and move this over. See, it did not run that low. So that was concerning to me because I had a limit buy order at 50% of this order block. And I wanted to see this candle come down and take this, or at least have the candle body close down here, and then that one ran, and then the candle body closes above it. Okay, if we were going to get higher prices immediately. The fact that this failed to run this and didn't get into 50% of that order block is something where you take that and now you mark that as like a red flag. Okay, why didn't it take that liquidity? It came all the way down here, but it didn't take this liquidity. Why? Because maybe the entry in here is not going to be a bullish continuation right now. And so these are the little things in price action that you have to look at and say, well, why did this happen? Because if price was to continue bullish, it would want to run some sort of liquidity in this order block. And that's a great failure swing on the 4-hour, sitting right there just above equilibrium. So then it's like, okay, well, maybe that's saving that for later down the road because we know that relative equal lows can be saved, for weeks later. And so I mark this area and I look at the 1-hour and I say, well, okay, this came down in here. This runs its low. Do we get a return of 50%? Well, we can take a quick measurement. No, it doesn't return 50%. Okay. That's another like red flag. Okay, I'm gonna note that this failed to take the liquidity right here, and then this area of action on the 1-hour doesn't meet the requirements to form an order block here for now. Doesn't mean price can't use it as one because we get another candle that completely engulfs these two. So I won't rule out the possibility of this. This did run some liquidity because it ran this swing low and this one. So these are things that you're just kind of noting. And this should help with the patience of if price does return here, what would we want to see? And so when we get to this area right here, this fractal of price action, and we have a candle that runs all this liquidity, and then this runs the bottom and then closes completely above it, and it goes into this order block, possible order block. What I have to see next is I have to see this candle come back down into this body and keep expanding. I have to see that. That's what has to happen if this is a bullish setup. If it doesn't happen, it's negated. And so you can capture these moves right here, but this is where we want to be careful of if we're targeting, let's say, this swing high on the hourly. And we're like, oh, okay, well, maybe this next candle's the one that busts through. That's really not how these setups work. And we can go back in time and look at those same type of fractals, and they're all just a little bit different. But like if we're going to see price expanding, like if we look at this little fractal right here, okay, look at same type of setup, couple down candles, this one comes up, but this one actually closes 50%. Okay, this comes back up, this comes back down into them, closes above it, and what do we get? Into the body and immediately expands up with follow through. So if we're going to get follow through, that's what I have to see. This has to close green. The fact that it doesn't, that should be an immediate. If you got into longs here, that should be immediate. I need to start. I need to cut my position up here. So this comes all the way back up. The moment that this you get a little bit of return back up in this area, it's get out with as much profit as you can, or you're just patiently waiting. And so I want to see, like I said, I want to see price action come back up into here, and this kind of expand up here, and then come lower. We just didn't get that, and that's fine.
Hey
But
Aaron, box out that uh bullish order block at like 9 a.m. and drag it to the right.
9 a.m. bullish.
Towards the end of the day. Yeah, that guy 8 a.m. Yeah, that guy.
Yeah, how it drives back through and then holds.
That was my key at the end of the day yesterday to go short and not long.
Yeah. So this right here, this should automatically tell you that shorts are in play. And we can start looking at, okay, well, where do candle bodies hold? And so I had two plays that I wanted. Um, I wanted this one, I didn't get it. I had a limit buy right here at 50%. I'll take you down to this fractal. I also had shorts right here. So I was looking at this up here and I was like, hey, it's possible because sometimes price retraces up farther than I expect. Oh, excuse me. Um, And so then looking at this area, here's the hour. If I mark that out as an hourly order block, okay, we're looking at these same price fractals, and this is what I'm looking for. We have a candle body. Here's a 15-minute, and it shows us on the 5 as well. We have a candle body that runs up, closes above these candle bodies. Okay, this runs the high of this candle, takes out this liquidity, and closes almost completely covers it. We have a candle that runs liquidity. Okay, this comes back up into the bearish order block. We close for the day. Okay, gap down. Someone was talking about trying to go long in Asia. Um, they went a little bit too soon. Okay, we expect price action to move to some form of uh, order block liquidity below us. If you look at all these green candles in this area of price action, look at what price does. Okay, here's a 15-minute like intermediate low or like a prominent swing low. Price closes below it, comes up here, but no follow through. Immediately runs the high of this candle and then closes below 50% of it. This candle being the one that closed below it with no follow through, I can highlight this candle and this should give me shorts every time price comes up into this candle until it meets its objective. Runs up. What happens to this? These green candles, the high gets ran, closes below. It's putting order blocks in. What does the next one do? Runs back up into the order block. Runs low. Okay, this one, same thing, comes up. Oh, runs the high, closes below it. Another run on liquidity. Back up into the order block. Start paying attention to these kinds of wicks versus this kind of closure. We always talk about like two runs on liquidity, one into the area, and then a second one on the one that went into the area. So see how this wick forms like this, and then we get this price action right here. This is your change in the state of delivery. These wicks are going to get ran. And so this was all bearish order flow. And so that's the waiting game. Because it's going to get these moves down and then rebalances. But here's your this is a run on liquidity with CSD. Okay, this takes out goes below the opening of these candle bodies, the open and the close, and then it finally makes its move. But this right here, and we'll go to the 5-minute on this. This is what I had marked out, and this is what I really love to see. Okay, this is a confirmed order block. So I like to see price run up, and we're looking like, well, man, it didn't run these highs with this candle. Okay, but what's around here? What can price construe as liquidity or an area of liquidity? Oh, we got a fair value gap sitting. These highs went into a fair value gap. So if I'm looking at this candle as does it take liquidity? Well, it does. It goes into what's fair value for selling, and it grabs liquidity. What does the next candle do? It runs the high of this candle, takes the liquidity right here, and then closes below this candle. this to me is a, like I said, another, like, this is high probability order block. This price will come back to this order block, and this order block should hold. You have it run down, comes back up into the wick. Okay, price is in a hurry to get down. It's end of day, so on and so on. Coming over here to Friday. Oh man, 50% is just holding. Okay. Now we look into our fractals of time. Man, that hourly looks like it put in a bullish order block. Okay, we're blending the time frames, and now we're looking at time. Okay, so if this was to be negated, then this time frame, a 10 a.m. candle, here's our 8 a.m., 9 a.m., close above. Okay, if this was to be a bullish order block, the 8 a.m. candle, then what do we need to see with this 10 a.m. candle on a 5-minute time frame? I'll just move these off one to the side so we can look at how the candles start forming. We need to see bullish PD arrays being respected. So at the moment, again, we don't run this low, but we do balance this whole area. I should see nothing but bullish price action, and up, up, up price should go. The moment that this is wicking, 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 and it's 5, 10, 15, 20 minutes in, and we're 20 minutes in, and this candle body hasn't even been closed above yet after it came down here and rebalanced this area. That's another set of red flags to say, okay, if this candle is meant to come back down into this order block, this hourly, and expand, man, this is not doing a very good job of expanding. We're taking 20 minutes just to close above this candle, and then this starts coming down here. Man, we're not even closing above this candle. But we had our 5-minute order block that was a high probability. We have price running up to equilibrium, and it's rejecting it. So as we see this come back up, we're not hoping for longs anymore, and you can mark out the time frames on your chart. But now we're getting into another candle. Okay, now we're looking at, man, this right here, we're 45 minutes into this hourly candle and we haven't expanded anywhere really above the order block. This price action is not looking good for longs. It's not doing what we want it to see. Price, when you understand the price action and how it works, it has to do what you want it to see it do. And so if I'm in a pinch where I'm like, man, price is just hanging out between order blocks on the hourly level, if I'm expecting this to be broken, it has to expand. It has to. It has no other choice. This is not an option for an expanding candle. So now we have our high probability 5-minute, and look at we have equal highs set right here, and price is holding that CE of it. These are great entries to get in short with a stop loss at the height of this candle. Hourly proved to us that it's not going to expand. Now we're switching short, and look at that. You got 25, you got a 10-point stop, 11-point stop. Depending on your leverage, that's really not much. A couple $100 at most. Again, depending on what your leverage is. And then look what you get at the start of the next hour. Okay, so this hour finishes, fails to even close above this high. Start of the next hour. What do we want to see in the next hourly candle? Oh, we want to see, if we know we're going short, we want to see manipulation up. Here's our area of interest. Build a position right here. And then we get a nice, the expansion of that candle lower. Okay, and eventually it's targeting this high. Or I'm sorry, this low. Here's that, the so-called bullish order block that we were saying, oh, this might be a bullish order block. We'll see how it goes. What you brought up, this was a nice little kind of retracement. And if you look at retracements, here's a 5 minute, but notice how this doesn't get into this fair value gap. Like this is a breakaway gap. If you look at these wicks that overlap this little area, think about what those areas are on any given time frame and what the time frame is just below that time frame. Like that has to be a BPR, right? Because we got price. Like if this was 1 minute, we have price that comes down, comes back up, comes back down, and continues. So that's like a 1 minute order block. Anytime you get overlapping candles like that on any time frame, 1 minute order block. Oh, look what we get. Price closes, comes back up into what could be a 30-second order block, more overlap, and then moves away. This low, if you look at where this delivery started, okay, we want to look at price action in areas of balanced ranges. Okay, so if we have this high that was over here and this kind of this area right here where we've just kind of rebalanced this area now. Okay, see how we can match up? Like this was an order block on the 1 minute before. Like just this up candle was price gathering short, goes into the fair value gap, and look at how this area is balanced right there. Like these opposing candles and order blocks are put in when like price is balanced. Comes back up, balances. This starts the run above here. Fair value for buying. Look at that little fair value gap. Comes up, rebalances. Well, what's put in on the candle that now closes below here after this area was balanced? Oh man, we have an order block. Closes below 50%. And so this area can be looked at as like a balanced price range because we have a down, up candle, and then down again. And we get a nice entry in there on the 1 minute, which coincides with that hourly. And so all we're doing is we're just breaking down, you know, at what time are these things happening? At what time in the process of the higher time frame candles is the lower time frame price action happening? And just blending that with whatever your model is. My preferred method of trading is order blocks. um, for me, that's just I look for areas where price runs liquidity and then confirms it. So I got busy at work. I wasn't able to get in this price action, but this probably would have been a setup that I would have got into probably somewhere right over here after this candle closed, and I would have taken shorts. And then now if we're looking at like what ranges have been taken for the day, um, another little thing to just keep in mind, and again, none of this stuff's like 100% all the time, but when you pay attention to the little details, like, yeah, this low was ran, okay, of the overnight range that was created, but no candle bodies closed below it. Okay, it was wicked through, but we didn't actually have candle bodies closed below it. We have candle bodies above this range. Okay, and it's failing to continue higher with the logic that we talked about on the hourly and then moving towards the 5 minute. London close, okay, we know that with London close and that time frame, this is a time frame where if price was retracing and London closes, we either have continuation or we have the finish of the retracement, and then we have price moving in the opposite direction of whatever it was doing going into London close. Okay, so it was running up, running up. We get stagnant here, London close. We run the high of London close and the high that was just before it, 5 minute order block held, and then we get the continuing higher time frame trend down. And so when we're looking at how the higher time frame rejected from the all-time highs, we want to be able to identify when price wants to give us those setups that look like they're going to go against the higher time frame, and we want to be able to identify what's going to negate them or what's going to prove that they're going to work. And that's kind of what we talked about in this fractal with the hourly. And so we can't say, well, maybe it's the next candle, because when we look at price action, it's never the next candle. It is a very typical pattern that happens over and over and over again. And here's that right here. 5 minute, we run the highs. Oh, is this an order block? Oh, it closes above, wicks back down into the body, continuation. That's just how it is. So if we got this one that starts closing down another down close candle, maybe it's not time to run this high. Maybe it looks at this as, oh, well, these are equal lows. I'm going to come back down and run these one more time, hit equilibrium of here, and then we're going to come up. So we want to kind of take that logic of what we see on the 5 minute over and over again, and you can study it. I would avoid kind of trading it sometimes, because as it's like migrating towards where it needs to go, sometimes this stuff can be like right here, like, okay, we run the lows of this, and then, oh man, price expands up. So price should return back to this and then maybe keep expanding. Okay, but it doesn't happen. It hits it, but then it consolidates. No expansion out of there. So that should negate, and look at how much time goes by with it just in a consolidation. So when we're looking at the lower time frames, we really have to keep in mind, well, where's the higher time frame draw that it wants to get to? Because it's going to put in setups that look like, oh man, this looks like it wants to now go up. And so that's why confirmation is going to be crucial. And then On the 15 minute, this was a lot cleaner. The down and then up. So 1, 2, 3, 15 minute. Where was that? 45. Okay. 55, 2. Okay. So 1, 2, 3. Yeah. So 45, 1, 2, 3, 1, 2, 3. So this was that nice clean, like down up on the 15 minute. Um, I was looking right here, and because this can't, like the way this was set up on the 5 minute, I was like, but I mean, this 5 minute, it held. I didn't get into a long position here. I was watching this live. I just didn't like the way this like went about. I wanted to see this kind of action, like this low and then this boom down up real quick, and this kind of just even this right here is like not ideal. And you just have to look at when price. You have to look at areas where price like is either bullish or bearish, and see what like price typically does around those certain time frames, so that you can like here, like this was a good one right here. You have all these like equal lows, runs down into it, comes back up. Okay, it comes back down in here, but starts moving up. But we're seeing higher candle bodies, and it's relatively right on top of each other. That's like a very clean. I can take an entry in here because it's ran liquidity and balanced this little area. That's just a rebalancing of the Asian range. And here we have nice like 50% entries, and then price finally moves up. It's just, it looks cleaner. And so it affords like a higher probability when price is not throwing these like random wicked candles in here. And sometimes it'll do that just to kind of like throw things off. Like this right here. I think this day right here, I didn't get into anything right here. Just because this candle right here, it ran these equal lows, but it's like that's a green doji candle. Like that doesn't look good to me. And so I didn't get into longs till the end of London close. Okay, and once I started seeing this pattern, okay, minus this candle, minus these two candles right here, this formation looks good. Run on liquidity, back down to the wick, closes above it. I like this a lot. Very deep retracement though, but I like this a lot where it runs immediately back into here and closes green. And then we have another return into the order block, doji, just a lot of retracing down here. That's that's what that piece of price action gave. But I like this pattern. This to me, even though I'm not in that trade, this is really identifying bullish price action. And it matches the higher time frame. We're going for all-time highs. What I waited for was this entry right here. London close. Okay, we have a retracement, but we have this nice bullish piece of price action setting up. Again, this down close candle runs basically to this open at almost 4 a.m. And then this candle closes above. So once this next one holds, once we start getting price action down into here, it was like, I think on the 1 minute, I got down somewhere right here. I forget where I got it at, but that was a good, that was starting to show good setup. And so we're just looking for these signatures. This is a very nice setup as well. Okay, we reach to a certain point, we retrace. This retraces all the way back down here to run this low. Perfect. Comes all the way back up. We get to move back down into the wick, closes above these two. Okay, I'm looking for longs in here. This is a very nice piece of price action. This is easy to identify, and it's showing me that price is bullish right now. And so I just want to take that same logic and translate it into the higher time frame, because the higher time frame are going to give a longer run on price, right? So hourly, when it expands, it's going to expand a lot farther than the 5 minute. Does does that kind of make sense with how I'm taking the same like delivery fractals from 5 minutes, and how the ones that I see that work out really well, how they actually form together, and then trying to take that same logic and just keep applying it to each time frame, and saying this is what price has to do for it to be correct. And it has to do it because we've seen enough now that when it does those things, it has follow through. And when it doesn't do certain things, then there's zero follow through, and that's now negating a plan that we might be in. And I say that because we have to be able to identify when our plans aren't going to work out. Like it's more important to be able to identify when our plans are being negated, because it's almost easy to identify when they are, because you're almost immediately in profit and price is running away from your entry. But it's the ones that don't, and we're hemming and hawing about, uh, maybe it will next candle. And then that can go from, if you don't have a stop loss, drawdown, even bigger drawdown, frustration, tunnel vision. And those are the things that we want to avoid. So we want to um, say price has to do this. It must. If it doesn't, okay, I'm either waiting if I'm not in position. If I'm in a position, start moving that stop loss up. If you want to allow it to stop you out, this action right here, let's say you're like, oh, okay, I'm gonna wait and see how this does, and you got an entry down here, start moving that stop loss up, because if you are right, this will continue on up. And even look at this 5 minute candle. What are we on? Oh, 15-minute candle. Even this coming down here and grabs this liquidity. Okay. Runs down, closes. This runs back down here. Oh, but fails to expand up. And maybe you're thinking, well, maybe this next candle will. Okay. Move your stop loss up to break even or in profit. And if this candle isn't, we can look at this on the 1 minute. We can look at it on the 5 minute. We can highlight it and say, well, at what point in time do I expect this 15-minute candle to finish wicking down in here and move higher, if it's going to do that? Boom, boom, boom. 11:15. Okay, at this point, this 5 minute candle, the way it closes all the way down here and closes below all these candles, if you had an entry down here, like you should be moving your stop loss up, because really we shouldn't see price break below this. And even this is like a signature that it's going to come back down. These long wicks are made to be ran. We already showed what like the CSD looks like, where we have candle body on candle body with not as big a wicks, but these long wicks, especially when it's the order flow is not in line, they're made to be ran. So really a 15-minute candle should kind of start off with moving back down. So this is the start of 15-minute candle, should be moving back down into this candle body, and this next 5-minute candle should have been continuing up. That's what it would have to do if price was going up. So that's use that logic to manage positions, and don't be afraid to. I think for the most part, everyone in our group, we've gone over enough price action, we've watched enough price action that you know what the candles do when they're in your favor. So now really focus on identifying when they don't do that, switching your mindset over to, okay, it didn't do exactly what I wanted to see. And like don't be afraid to say that. Like I tell myself that all the time. I have to tell myself that because I can't get tunnel visioned into, oh well maybe. I have to say it has to do this for me. If it doesn't, nope, I don't want to be in that trade. And then just apply that logic over all the time frames. And if you don't know, then we just sit and wait because the A plus setups are going to come. Like this little piece of price action right here on the daily. If we're unsure of where it's going to go, I really didn't trade this. I was waiting for this. This is the only thing I was waiting for. When I was looking at this, I said price is either going to come down into here and it's going to reject and continue with the bullish price action towards all-time highs, or we're going to get a deeper retracement and maybe it's going to come down into this candle and kind of balance this fair value gap. And so I start hunting areas on lower time frames of I want to see CSD somewhere in this candle. And where are those areas of liquidity that can be grabbed? And we should see CSD after that on the lower time frame. And we could just revisit that real quick to see what it was. That was Wednesday, January 17th. If we go to an hourly, oh yeah, see this, like this stuff is really, really, like really good looking price action. Okay. In an area of consolidation, remember this was like CPI or something, large range put in. We're ranging within the range. When you see consolidation and you see intermediate low was put in and we're expecting higher prices, this must be ran before higher prices happen. And you can look on that on all the different fractals. Okay. We have nice tight grouping of candles here. Okay, that runs on the hourly runs liquidity. Okay. Hourly swing lows put in, failure swings. They get ran. This gets ran. Closes above 50%, continues away. Hasn't returned back to this area yet. Oh, but look at this. Why did we put a low in here that didn't run into this? Finally, we get to the day where we're back into some normal price action where it hasn't been ranging. I think there's a holiday in here somewhere, but this is very um, not volatile price action. Here's our original daily. Actually, we'll just do a gam box. Okay. Oh, 50% touch. Okay, well, how far up did this close? If this was the candle that ran liquidity, oh, imagine that. Closes above 50%. Cool. So then I take this area. What is this area? That's a BPR. That's all that is. It's a balanced price range. That went down into an order block. Oh man, another 50% entry with almost zero drawdown. And that's what starts the move out of this area of consolidation after it hit a daily order block. So look at how nice this price action is on the hour. It's the A plus setups are going to shine. And if you're losing capital in here and then you don't have anything to deploy here, like this is a great options. This is a day where you want to take calls if you're playing options. Futures, if any of you guys have a cash account, you need 1900 bucks with a trade of 8 to hold on to 1 micro. And let's see here. Just as an example, trade. Let's say we take a 1 micro run buy. Let's say we target the 50% of this BPR. So that's the same logic, and this happened on a smaller time frame. But if this is a balanced price range and price moves out of the balanced price range before it goes higher, we want to see it tag 50% of that balanced price range and then expand higher. On the 5 minute, you'll see that as a different fractal. Okay, and and again, without going to the 5 minute, look at what's put in on a 5 minute chart before it actually makes its move. Price runs all the way down here and comes all the way back up. That's an intermediate swing low. Shown here on the hourly with a big wick, this is going to get ran. It has to put these in. It has to generate liquidity to be ran to continue in the direction it wants to go. And so when you find these things or equal lows put in, just know if you want to get into a position, wait for these areas to be ran and then look for CSD after they're ran. And I would say, look for those. Let's say we just go to all-time highs. Okay, one, we're on micro. Yeah, we're on micro. Okay. So if you just held 1 micro, and you can hold 1 micro overnight if you have 1900 bucks in your cash account. If you strategically just took 1 micro, let's see how much drawdown. What are you risking? You're risking $98. Okay, bottom of this wick. And you're saying, I'm gonna take this to all-time highs. That's 1900 bucks. That's another micro you can add to the next play. And that's like cherry on top money. You can intraday trade this. You can go and switch over to NQ contract, and if you want to trade one NQ contract intraday, and you're like, cool, I know higher time frame price action is bullish, so every time I go into New York Open, I'm looking for a retracement into a bullish order block, a bullish fair value gap, or whatever it is that you uh, your model is. You can intraday the minis and take your 20, 40, 50 handles, whatever it is that you target, and add that to your account. And look at what this is doing in the background with a $98 risk. And now you just stacked another 1900 bucks into that cash account. and it's just using the same logic that we're using on all the time frames, but we're applying it to an hourly time frame with a bullish weekly outlook, with a bullish daily outlook. And so this is, again, that's the practice of this, is to practice the things that are going to build your account. If we're just pushing buttons and we're 50-50 on plays, the only thing that's going to do is it's going to continue to build a little bit of doubt in the back of your mind. And that's what we want to remove from our trading. We want to allow the patience to build solid play after solid play after solid play, so that we get very confident in what we see in price action, and we feel comfortable taking it, and we feel comfortable accepting the risk. And that's really what it boils down to, is, are we comfortable accepting the risk that we're taking? And so if I took this 5-minute order block and I was gonna sell 5 micros with a stop loss above this, okay, that's a $200 risk. I'm risking $200 to get 1100. Am I comfortable if this fails? But after all the analysis and looking at it, I should be comfortable with this risk to reward. And if I'm wrong, I'm wrong. And that's okay, because the setup looked like it was going to be a probable setup. And if we're always taking whatever our model is, and it's a winning model, 70% of the time or whatever, and we're leveraging correctly, it's the stuff in between that drains the account. But you take that setup over and over again, and over time, you're going to stack your account. That's what the mathematics work out to. And so this model with 1 micro is the same model here. This was just an hourly and a daily swing play with one. This is an intraday play using a little more leverage. And over time, as time does the heavy lifting, then you can start bumping this stuff up. And it's like, eventually, you know, if the model continues to work, which it should, because you back tested and all this stuff, and now you're working with like a 50K account, you're like, oh well, I can take three minis now. I'm comfortable with risking 1,200 bucks, because I know that this model works 70% of the time, and we're still at like a 1 to 5. This trade was a 1 to 5. So over time, this is going to stack, and yeah, you're going to get dings, but it's having that patience and understanding how price action works within your model and what to look for. So that's kind of what I'm hoping, as we continue to work with like price action and looking at how the candles actually print, the more you can understand like why it's forming the way it does. Um, and like for me, remember I wanted to, on the day I said, oh, I'd like to see price come back up here before it goes lower. Let's just see where this, I'll put that line right there. We'll make it blue. This is just what I like to look at. Okay, so somewhere above here. Okay, here's the blue line. Okay, got equal highs right here, and then just this wild long wick that didn't even take this liquidity. Well, this might be a good area to look for going short. We have price came down, ran this high, and it almost appears to be like a bearish breaker right in this fair value gap. So this is a place on the 5 minute that I would watch price action, and I would see what does price show me when it gets into this area. And if you're a fair value gap trader, this could be an area where you're willing to risk um, taking a trade lower if it looks like we're setting up for lower prices. It could be, I don't know how much like everyone's leveraging, because I know with the PA accounts, it's, obviously you are allowed to use more leverage. Um, but like for myself, I'm just working with a cash account with 5 micros. That's like my kind of, that's like my goal for myself this year is like take a little bit of money, work with 5 micros in a cash account. Most of my trades are going to be risking 200 bucks. And they'll be anywhere from like 800 to like 1500 on the take profits. Okay, so like decent risk reward. Okay, so here's a fair value gap where it's another $200 like risk. Maybe you're just targeting the lows in the 4 hour order block. Maybe we don't know yet if this is going to displace or hold price still. But that's still like, and you could be even safer and put at the top of this. That's still a 1 to 5 risk reward. That's where we have analysis that says, oh, if price comes back up into this daily and rejects, then where is it going to continue to go? And it might take out that other low that we failed to take out. Maybe that was down here. I'd have to look at the daily, but that's just kind of like the like logic that we want to apply to if this then that. If this is what price action is showing me, it should do this and then it should do that. It should run back up into this candle body and then it should reject. And then we just hunt stuff on the lower time frames. And if we're worried about IOFED, okay, we're just risking $30 more. Get a tad bit less, but that's pretty decent. And we shouldn't see price really like close above the 50% level. But I think that that's a decent like risk reward play for if we want to see price come back up into that body and then continue lower on the daily, looking for rebalancing. I would think that we would have more um, like more rebalancing of this area that we created. We'll see, because this candle is kind of weird, this little candle body right here. This is the stuff that like I look at and I'm like, it frustrates me with the daily because this isn't clean. Like it's not, we don't have a candle body that starts equally right here. It kind of gaps down. This runs up, closes lower. Like, okay, it's showing bearish. Um, I wanted to see either like continuation up, like, and this be like kind of like another little bullish order block to where it just grabs the liquidity of this candle, and then we take the low of this, and then, or we wick back down to this and then close green, like above here. I'm just like, I'm framing options of what price could do. Like, are we holding this high for now? Or are we like, oh, we tagged the high, but no, boom, we're on a continuation path? Because that's the other thing that can happen is if we were going to close green we would have a daily bullish order block in one of the days at the all-time high. And so, is there a possibility that that could have been a daily bullish order block? Yeah, sure. These lows could have been ran back into here somewhere and then closed, well above this candle body. That could easily happen Friday. So I'm framing the possibilities. This is what it gave us. It was unwilling to continue higher during a time where hourly expansion would have been prime, which is
Did
what.
did we take some sort of liquidity 2 days ago on a higher time frame?
So here's NQ's all-time high. So this was we took all-time highs right here.
So yeah, my assumption is since we took the external liquidity, we go for the internal liquidity,
Yeah,
and I
that's
think that's around 428,
yeah, that's
and even a little lower at 406, which is the mean threshold of the hourly fair value gap.
yeah, that's 100% possible. That's again, all these all these scenarios are what like we can predict based off of like an accumulation of what candles are showing us. What happens if Friday ripped back up and the candle body closes up here? Remember we talked about that early on, like this has a couple possibilities of how this weekly candle closes at these all-time highs. This could be another breakaway gap. That's a total possibility. This could just be completely expanding up. Like here's a weekly. How do we know that this wasn't like a weekly three drives? Drive, retrace, drive, small retracement, keep driving. You know what I mean? Like I'm not gonna, I don't wanna like set myself to a certain like a limit of what price is going to do. Like, okay, prices it's got to do this. We could easily close completely green up here, and this could be a continuation in a drive. Heck, it could still on the weekly. This is a fair value gap. It could just tag back down into here and keep going.
Oh yeah, no, I completely agree that, and that's where I'm going with all those equal lows I see, or the wicks that are so close together on the hourly chart around that 428 area.
Yeah, right. It's basically this low right here.
Yeah,
Yeah. So,
and we're so close to it.
and at the same time, look at what kind of retracement we got right here. Like, could we come back up, run these highs, and then retrace back down to here and have something similar to this? Could this have been the high before the all-time highs? And this is the second run on liquidity? Because we did put like a daily kind of like failure swing right here, which this candle body ran. So it ran this and it ran this. And now we're going to come back down and rebalance this or come back down into this fair value gap, retrace back up into the order block because maybe this was enough. Sometimes the daily doesn't give you like as nice looking setups um, that like the hourly or the 15-minute does. Like, and this was a prime example right here. This October low. Here's that confirmed order block. The theory that looks really good. Okay, here's some really nice confirming order blocks where on the daily, really clean. This candle runs liquidity. This candle takes out the low, runs more liquidity, closes above 50%, and then takes off. We get that same fractal here where the liquidity is stored in this order block. This ran liquidity, it's holding liquidity. Comes back in here, the low gets ran, we expand away. Oh, doesn't hit the order block. Swing low purposely put in. Swing low purposely put in. Runs it. Engineered liquidity along the way to be ran later. Now we get back into the order block. up, immediate rebalance, higher. But it wasn't time for the continuation for this to be ran. So what we wanted to see here, again, we have to apply the logic of if we're running into a daily order block and we get this immediate um, rebalance with expansion out, we should have only seen price come back down to here, and this should have immediately expanded, not consolidated below these candles. These candles should have been immediately ran above and closed above because we came back down into this order block. And it should have been used as like a propulsion block. So because we didn't get that, that whole bullish scenario from this particular order block is being negated right here for the continuation higher. And it wasn't until this into this order block, candle body hits 50% perfectly, closing in this gap and this little doji candle. But look at how unclean that is. This is into a daily order block and we don't even get like a 50% move back up. We get these three small range daily candles that finally, I think that barely, this closes above it. Like, like this wasn't clean. And this was a time where I'm like, okay, I was waiting, and not really playing anything right here. And then I came back over here and I'm like, dude, this is a confirmed order block. Like this setup right here is beautiful. It has all the features that this should expand out of. And then once we closed above this candle, it was like, okay, it's it's longs every day and buy the dip. And then because this range balanced itself on the way down, and you can see that with every little area that it balances. This creates a new range, balanced itself, balanced itself, balancing in here, comes down, almost balances itself, left this, oh, this finishes balancing this into a daily order block. So because this is a fast move down, what do we know about fast moves down? We don't need to do a slow rebalance along the way. We can move with speed up and out. And this is that kind of rebalancing, slow rebalancing on the daily back down to there. That's why we have speed coming out of there. And we got, here's that continuation. These signatures and price are very, very, runs liquidity, runs the low, closes above it. We don't get the tap into here, but we do get the tap into an old high, rejects, more expansion, consolidating for the next run. Okay, pretty typical. Doesn't run the highs, but we're setting up to run the highs right here. Consolidate. What do we want? We have an old failure swing put in, 3 bar, in a fair value gap. Candle bodies into the fair value gap now. Big expansion. Okay, immediate rebalance. Pretty much rebalancing this whole thing. And now up again, doesn't run the high, consolidates right before the high. And you can see this pattern forming. Runs the low that was put in the consolidation, expands up quickly. And so now we're at a point where it's like, are we, because now we're at all-time highs, now we have to look at how these form and kind of throw the, like, give yourself the different scenarios that it could be. And so I think this is, you're definitely right. This is the next area of liquidity that can be run. This fair value gap and this swing low that was put in. the interesting part will be is how deep into this do we go? Do we go into here, come back up, finish balancing this out, and come back down to here? Do we wick to this high and leave this open for right now and continue with higher prices? So just kind of play those scenarios out, and that's where you can put in that if this then that. So if I expect price to run this low and continue higher, then I would expect this to be a daily bullish order block. And so the next candle I would want to see would be wicking down, taking out this low and closing green. And you can wait. You can take an intraday setup and you can wait to see how this next candle body closes. Or do we get a wick up and then a down close candle that day that closes down in this fair value gap? And then now we're looking at, oh man, if this closes down here, now we're looking at, well, what are the odds that because it closed here into this fair value gap, that we continue to just rebalance this area real quick and come back down into this daily order block? See, so that's, I'm just trying to, just be open to those, like how that is, and try to go through what the candles would form and what they would do first as far as like manipulation and then closing in that in what order. Does that make
Yeah, this
sense?
is kind of where I wish I was a little more like bots and able to pivot so quickly on his bias.
Well, this is what
Because
I'm hoping to help. Like, I want to help you guys like be able to pivot by showing like what negates price action. So that's like if you have any questions in whatever time frames, like feel free to shoot and we can go over to help like solidify how to be able to pivot and where you're looking for those pivot points to occur.
right now I'm looking at like a nice head and shoulders on the higher time frame, 4-hour chart. And I'm also looking at the wicks that we formed as just a draw to go higher, but wanting to get internal liquidity first.
Yeah. Yeah, the 4 hour chart's very interesting to me right now, because it's so wicky. And so I like to refer back to, like, if you're going to look at the 4 hour chart, I like referencing the 4 hour chart because sometimes it shows things like a little bit cleaner than the 1 hour. Um, but this is just like the daily. The 4 hour to me is showing, yeah, like definite bearish price action. We have this, here's your daily swing low, here's another 4 hour swing low. We have a big imbalance down here. Um, and so then I just kind of just hunt along the chart and I look at, well, okay, here's one possible order block. Okay, but then it ran up and like this is an order block. This has the same logic. Back up into here, runs this high, high gets ran out again and closes well below it. Like that, this order block, because we just took all-time highs, um, and we already had an immediate rebalance where we closed below, came back up into it, closed, and then went lower, rejecting this one so far. Um, but then no follow through on a 4 hour. So back up into here. So this is, to me, this is Monday's draw on liquidity. And this could happen, this is 100 points. This could happen, before New York Open, 100%.
I just want to let you know your mic audio reduced a little bit.
Oh, sorry, I had it up because I was taking a drink of my tea. So then I would like just look at if you like using the 4 hour chart, what along here, other than the obvious needing rebalancing, I would kind of start marking out certain things like, okay, what matches up with this high? And just start giving myself like scenarios. Okay, we have a couple areas where this is like almost like a BPR, where we've had price like come down, come up, come back down, back up, back down, then finally goes through. And I might look at this on a smaller time frame and say, okay, well, what's here that price might want to wick to? Um, but none of this really like is standing out that it took liquidity. Like if this wick came down here and ran all the way into this little fair value gap, and then came up and this wick came down like into that wick and then really ran up like that, I'd be like, this would be a point of interest where I could see price being drawn to because it's kind of fitting that order block logic that we were talking about. So far, these order blocks are holding for continued lower prices. So where is the draw besides this? Okay, so in this bag, you could mark out this 4 hour fair value gap and just see what price does around 50%. Do we get a candle that closes at, below? How does it react at 50%? Um, but as I'm looking at these and I'm noticing that they never took liquidity along the way, like even this just doesn't grab the liquidity. And when we took a look at that, at the bullish price action from farther back, we could see that stuff was grabbed along the way. Liquidity was grabbed along the way, noting like definite bullish price action. So then this tells me that, well, there's a high probability that this gets ran. Um, Again, kind of another interesting scenario. We get this, and here's the example of that on this area of consolidation. This giant wick that's put in, like that is put in to get ran. Thursday the 11th, Wednesday the 17th. But that's by design. Same thing with these kinds of wicks. So we want to look at and observe stuff like that. Like these will event like these look ridiculous to me. These look like they need to be ran. When is where we have to determine how far we get a retracement or just what price action does around this area. Like I said, we could get a move back down to this bullish order block and this could be hanging out. This could definitely be waiting for later. And we run this low and this low and go below 50% and then start to expand out just because of how like these wicks are. And I think it helps to go to other areas of price action and just kind of look at like how does the 4 hour like move when it's going lower and find areas where it's like on a definite like kind of retracement. See, and then compare to when price action was actually bearish on a higher time frame. So this was the highs of 2021. Well, notice how like it's not very wicky at all. It's the exact opposite. It's putting in some equal stuff, but really coming up to rebalance and having some nice rebalances. That's like that's a really nice 4 hour piece of price action right there. Finishes the rebalance, order block, high gets ran, closes below 50%. One, two, three, go. And so just kind of compare and contrast. Okay. Look when price action starts to get wicky. However, this is opposite though. It's constantly running the previous liquidity. I don't know if this area might get hunted. It almost that's a there's your like breaker almost, but if I go to this candle right here, I think that's almost the exact same. Low 153, 38.50. High, yeah, it's almost right there, about a point off. And so you're just kind of looking back at price action for, when price was retracing. Like here's kind of like a head and shoulders area. And it's not always going to be the same, but like let it kind of give you clues as to way this 4 hour chart likes to do things. And so that's what I'm trying to use is like to help build like patience because when it's good, it's good. When it gives you the setup, like those like I wish I knew how to do this back at those all-time highs. Like I wish I'd already learned like ICT stuff because I mean this is like all these equal highs, this imbalance, and then price comes up and like this setup is beautiful. If you're good, you got short here, but this afforded you many entries for a short with nice looking price action. And I mean, look at the range that you get to cover for again if you're taking like micros, intraday trading some of this stuff, okay? Um wicks put in, okay, these kinds of candles put in along the way up or down. Those are areas for price to run. In a consolidated area, look at the wicks. Look at how the wicks get ran and look what kind of candles are formed. This is formed and then these get ran. Wicks along the way. So that's like you can start hunting like price action like that and going and looking back at patterns. These kinds of wicks along the way to be ran for later. Like all this stuff should start sticking out now. And so when we see this, like this is a real fast area of price action. It came all the way up and jammed all the way down in this 4 hour candle. Very fast area of price action. I know that this is going to be a high that gets ran. If I'm looking back left, this has a really long wick with this versus where price actually CSDs. You kind of get more like the candle bodies look tighter. Price kind of stays a little consolidated a little bit longer. kind of consolidate a little bit longer.
Check out the 4 hour where ES is right now. It's in a lot of consolidation and has two equal lows that are pretty obvious.
Dude, that's another thing. ES hasn't oh, okay, it did tap its all-time highs. No, that's NQ, sorry. Yeah, dude, ES is lagging big time. And so I'm wondering, is that SMT? Yeah, like this is a huge consolidated area. Like this wick right here, these wicks, yeah, equal lows, equal highs. Here's that
It
wick
has
like it
a volume imbalance around 48.70.
right here.
Yeah, that guy.
Or is that a little bit higher? Yeah, there you go.
It's also the new week opening gap.
And this still needs daily green. This is I put this in from the all-time high. This is for the daily level. It needs still needs green candles on the daily to fill this in completely. Let's see what it looked like on the. So we did close above kind of like 50% of that area. I haven't really marked out too much. Um, and so this, yeah, this is kind of interesting setup. And you have to look at each indice to see what it likes to do. Here. So this runs liquidity. This is another little thing that qualifies for me as well, is that when we gap down and then run up and close above, this is a candle body that runs the low of this candle body. So it qualifies that as like if this wick ran this low and then closed above it. It's like this would be an order block for me on the daily. And then if we were using like the logic where we have a consolidated area, say, okay, well that could wick and tap that 50% and then continue higher, and that would be tapping into this order block, and that would be 50% back into a balanced range. So it's like balance range created, comes back out, returns to the balance range 50%, then expands higher. So that like whole balance price range that applies to uh, candle bodies, one on top of each other. It applies to consolidated areas. It can apply to a wick. That's why you'll see like wicks 50% get tagged because it's an up down price action. Pretty much gets to 50 and then goes for the draw on liquidity. Look at all these failure swings put in. Doesn't take it, and now it takes all of them. So that whole 50% balance price range, there's like levels to all that.
Stream paused.
Let's see here.
I'm wondering if the times that price doesn't reach 50%, that it could be like a clue to say, hey, we're going to run this 50% and go the opposite way.
Yes, it could. Sometimes I think price is just in a hurry. Like if it kind of gets there, like you would look at those areas for like CSD, some sort of like setup on the 5 minute or something. Um, I mean, we could even like those are great like back test studies. Like if you're wanting to like keep affirming these concepts so that you get more confident in what you're looking for at the certain areas. Um, just highlight this, and this was the January 16th candle, and then just go back and look at, well, what did it do at that area? Okay, so January 16th, right here. What time frame do we have? We have 15th. Interesting. So it just creates these equal highs. Turtle soups it. Why is it showing all the way back there? It should be, oh, no, Monday. Was this a holiday? It must have been. Yeah. Ah, okay. So it's showing Monday and here's Friday, here's Monday. Okay, so Monday, Tuesday got grouped in. Okay. So this was like where it came close to 50%. Here's that wick. So you get some sort of failure swing ran. So where would that liquidity draw be? Let's just take this fair value gap entry just to see. One, two, three. Okay, so this is another thing. Sometimes like if there's no order block right there, like this is kind of an order block to me. Runs up in this fair value gap and then completely closes below. But like this is a big order block. Covers a lot of space. So then the next time price runs up, okay, well it's running just into the fair value gap. So as this takes liquidity and closes below, this now becomes an order block candidate. And it looks like on the 15 minute, it was probably, here the 15 starts, yeah, and almost those 50%, and gives you a nice little wick up into there with your subsequent price action now trailing lower. This is just an area of imbalance. This is a huge balance price range from Monday. Pretty lame holiday. So let's take this area. Okay, so this starts a new delivery out of this balance price range. Price goes lower. And so This runs the highs back into this area. There's like so many equal highs. So really what I wanted to have seen is I would want to have seen like price come back up to this 50% area, like run this little swing high, maybe this fair value gap, and then reject. But the fact that there's like 10 equal highs sitting right there gives kind of confirmation that it's going to go higher. So then you could just wait, like intraday stuff. Again, sets more equal highs, runs this liquidity, and then closes. So now we should start seeing like price. And again, this is in an area of consolidation. So like I wouldn't expect to see price return to this order block and reject away. I would only expect this kind of price action for an entry in here and then take it to wherever my target is. So if it's here, we're just taking it from entries right inside this candle. And so you get this closes above 50%. So now I'm just taking entries in this candle. 5 minute, 10 minutes, and then we start to see the runaway. Take out these lows, eventually these lows. Again, see the type of low this is and see what kind of price action runs this type of low. Another kind of real, this is that like, this is that kind of like, uh, let's see how many people we can get. We're going to give an order block looking setup right here, but the flow is bearish. So as we do this, and this closes above 50%, this looks great, but it's only to run this high because we have this over here, and this becomes an area to run again. And so look what the candles do. If you're an order block trader, this is really good price action to study because this happens a lot and you got to be like ready to pull the plug on a trade. Okay. The return to the order block, this should wick and move up and should close green and really like expand up. Like this might have hit an order block.
When do you look for price to hit 50% opposed to the high or low of the order block? Because usually I see you taking a trade at mean threshold of it.
Yeah, I think higher time frame stuff, mean threshold's good.
Oh,
Um,
okay, so lower time frame, not really.
yeah, because sometimes it can like you can like this kind of hits mean threshold right here. It's just I don't know every time it's going to go mean threshold and when it doesn't.
Yeah, you can't hit every trade.
And so like if I have this marked out, like great, this one happened to tap mean threshold, and this is just like an order block setup um, for running all these fail swings that were put in equal. This nice kind of like wick sticking above these equal highs. Um, but I would enter right here. I'm there's some plays where I'm starting to like go here, but like I told you, that 4 hour order block one, it never hit that, which was kind of like, interesting. It never dug into the 50%, which kind of tells me like, oh, that might get ran later. This gives a mean threshold entry. And yeah, that's really nice because you get like zero drawdown, taps it, and immediately comes back up.
Yeah, but at that point, it's not really a confirmed order block because you don't have a price closing above the bearish candle.
This closes 50%
Oh,
above.
50% above. Oh,
Yeah.
okay, I see.
So
All right.
see how these are equal lows? Again, this is just this isn't your this isn't your higher time order flow right now because we already determined that our higher time order flow, we'd want to see something CSD or some sort of liquidity ran at 50%, which we had this fair value gap sitting at 50%, and price has gone into that fair value gap multiple
Oh,
times,
I
three
see.
times and rejected. So our order flow is bearish overall. Can you play a retracement based off of a mechanical setup? This is completely mechanical. I know this is going against higher time frame order flow. So the equal lows were set in, candle bodies run it, the low gets ran out, and this closes above 50% of this candle. I can expect price to return to this candle body and start hunting this. I'm not expecting this to be hunted because our overall higher time frame order flow is currently bearish on a daily retracement. So I'm just hunting the closest. It could be this, and it could have rejected this. So you could just play, like, take off a big position here and leave a runner to right here. But really, this was the play of the day. Back into that kind of area where it's building a position, and then this candle body runs the liquidity of these candle bodies. This wick gets ran, closes below 50% of this candle, and then now price is coming back up into this candle. This is just another mechanical setup, and we're hunting stuff that looks like this. This is just the fake order block put in below this low to retrace and then make its move to take this out. So that's why, like I said, like you can look for these mechanical setups, but don't forget what your higher time frame bias is. Because then sometimes we get trapped into like, oh man, look at this thing, it's running. Oh, maybe I'll like take profit up here. And then it like quickly goes heavily against you. And you're like, oh
Yeah, I
dang.
think more often than not, I'm getting faked out in the internal range.
Like with this kind of stuff.
Yeah, I think so.
Okay. So again, that's just keeping like that's why we want to build on like what is our mark out those daily um, parts of price action. Okay, so fails to reach above here. We have this as a confirmed order block. This runs, this candle body takes out liquidity into this fair value gap, 50% hold. Bodies hold 50%. This is nice because you get three candle bodies that are just holding 50% with a good move back up. Okay, it fails to continue through this high. This puts in a 3-bar high. Okay, so we know that this is going to get ran later and it's almost equal highs. And then look at the kinds of like lows that were put in here. Okay, so if we're in this day right here, our we want to see the daily hunt this right here coming back into this order block. So on the daily, the higher time frame bias is that price will return to this candle body because it's confirmed. And see this again here on the daily, it does like little funky stuff like this depending on like what days are involved and if there's holidays and stuff based around it. But this doesn't close above 50%. But then this very next candle runs and closes above both these candles that were candles that took liquidity. Okay. So the fact that this closes above this candle is confirming higher prices. So if I'm working intraday in here, I want to see price move down. So then I'm hunting the low of this day. And if that's taken out, then we're looking at maybe lows that were put in London with with continuation that gets ran and then it ends up coming back up and closing here. Well, then this very next day, if this has been taken out and these haven't, then we're looking for price to run down and take this out and tapping this candle body. Like that's what we want to see happen. Once it does that, how does price react at this area? What we should see is it goes down there and it wicks up. And we can confirm we have a very small fair value gap here. And the candle body respects 50% of this fair value gap as well. Candle body doesn't even really get into this fair value gap. The next day opens and we have a 50% mark. This is like a balanced price range. It doesn't get down to the 50% level or near it, but it used this fair value gaps 50% level as a marker to go to before moving up. And then we see the close above this candle, signaling higher prices. So it almost closes above this candle. So again, initially what I'd be hunting for is I'd take the open of this candle body, I'd mark that out, and I would say I'd want to see price tap into here and reject. So what is around this area that price would be drawn to? And I could go into the hourly and look at that. And it's okay, we have a fair value gap right here. And here's the high of that. Here's the, I should mark out, but this is probably the candle body high. Let's see, we'll just mark it real quick. Openings and closes in relating to candle bodies are important. You know, all of it's important, but like, look at when you study price action, look at what price does in relations to candle body opening and closes. The candle bodies run the open of this candle body. That's a run on liquidity. The wicks are doing the damage, and we look for plays within the wicks and we target certain areas of the wicks. Here's a failure swing, which creates like equal highs, and then it runs the equal highs, runs the opening of these candle bodies. If you see candle bodies set up like this and their openings and closes are very similar, close, open, open, we want to hunt stuff in these areas. So as I'm marking all this stuff out, it's telling a story. And the fact that this didn't continue and expand and close above means it wasn't time for it to do that yet. And we know that we already talked about this confirmed order block. We want to see, again, just like on the hourly, I want to see something put in right here before price actually expands out, because it has to engineer liquidity. It has to. We never see
Could,
price just move linear.
could you draw that same line on the candles or on the 10th and 11th? The open and close were right next to each other.
These ones right here.
Yeah. Like, would you look to hunt for like that same setup um, days afterwards?
So if I know that that price is going to, if this is a doji candle, and it's hard to see because we have this here, and we can get rid of this now because we're moving past that. And I see that basically just price came right back to where it opened, closes at the same spot. we have areas of confluence where we have the opening and close are right here, and we have about a 50% level that was just right up here. This was the fair value gap we marked out on the 5 minute. We know that price likes to put in these swing highs or swing lows for them to be ran later on. So again, this is an added level of confluence of where should I hunt setups. And so this was Monday, Tuesday tied in together because we had the holiday Monday, so it was a half day. So we don't get a Monday candle. Um, but now we're making that range even smaller of where we want to see price use a bearish PD array because we want to see this. We want to see price expand out of this candle. This candle has taken equal lows, the liquidity in this fair value gap. It's closed below these candles and this candle, and it's ran liquidity. The low gets ran out, and then again, here's kind of like that, the daily where it doesn't always give the cleanest setup, but the fact that, like I said, these two candles closed below here, and then this immediately closed above this candle, that's a very bullish sign. So now I want to see price return to here and expand. So these are just giving levels of what we're looking for. So now I have these marked out. Ideally, this is what I want to see. Why? Because it gives a lower priced setup to go long, which means I'm going to capture more points long. This almost closes above here. So targeting like these two candles are kind of engulfed by this candle. I just start looking at these areas on the hourly and I see what's forming. So we have right here is the start of the next candle. Midnight open. Here's 4 a.m. So 4 a.m. opens, and it runs a high. Okay. Again, we want to look for wicks like this as places to be ran. Okay, and it runs these highs as well. Okay, here's the top of the candle bodies. Okay, so this is, we get this kind of area in Asia where this doesn't really like do anything. Like it's not showing that it wants to return here, and then price even expands faster. And so now we're kind of losing hope on getting an entry back down in here. Here's the entry at this candle body's high. And so when I look at that, if we haven't made the move or gone to any position in Asia, here's an hourly swing low put in, and this gets ran. And look at the how this setup occurs. So a failure swing gets ran, and this is the type of price action that forms after a failure swing gets ran. It opens lower, so that's like this wick getting ran, and it closes above. So now I would want to see this very next candle dip into this candle body. 50% is ideal. Does it have to? No, but we get it. Okay, so I would look at, well, what's my range on this candle body? Like if I'm looking to enter, and I could go down to the 5 minute. Let's see, 48.13, and if I enter up here, 48.14. Okay, well that's a small range, so I'd be comfortable entering right here if this doesn't hit, because I'm not incurring very much drawdown. Price expands way up there. Okay, now I'm going to take this candle body into account because of this candle and how much it expands and how far it closes after running in here. At some point, because we're bullish, we've already ran the daily order block and we're expecting a retracement. Here's that high. Candle bodies meet with those daily candle bodies, open and closes. And again, we have to take the top of this candle because we don't know if we're going to get a shallow hit, equilibrium, or a deep and take out this failure swing. 8, I don't know if there's news. What day was this? It's not NFP, it's the 19th of Friday, so taps just the top of it, and then off to the races we go. So we're taking the same logic, and price is showing us that this is what it wants to do. It looks really good. The setup's moving in the higher time frame direction that we have, and we're waiting for these areas to come back and be hit. And so you can grab this entry right here. Like that's probably going to be a goal of mine, like um, hopefully towards the end of this year. But a goal of mine is going to be to take this entry right here, take profit at whatever that next like area of liquidity is, like take profit here and then re-enter back where if I miss this move, this would be my initial entry if I didn't get this. And then re-enter here for the actual expansion. And it's going to take out this swing high because again, what do we know that price wants to do? And if you look at this price action and this big wick, it's going to create liquidity to be ran. It has to do that. So it's just a matter of patiently waiting for the right liquidity to be ran that's in line with higher time frame order flow, and being able to capitalize on that. And so you get your, and then you could just come down here to the, if you want to, you come down here to the 5 minute. This hourly gives a pretty good one. If this was like a bigger hourly candle and you had a lot of like wiggle room in here where you could incur like a decent amount of drawdown, then yeah, um, dive into that 5 minute and hunt for an area in here that looks like, okay, this like price might need to rebalance this portion. So here's the area on the 5 minute down here. But this is really, this is a very small consolidated range. Um, let's see what kind of, with one contract, what kind of drawdown are you looking at if we take the top here? Okay, so again, you're under 200 bucks, which is a really great risk reward. So then on the daily, how do we know? Okay, so then this is what comes into play too. After an area of consolidation, well, we're not expecting the high to be ran and for price to wick away from it. So how do we know like where price is going to expand to? We almost expect a breakaway gap to happen on the daily or a candle body that closes and it's a large green candle body. So then you can take like, here's the here's the price leg that runs liquidity, and you can just go to 2, double it. So this should at minimum hit the double of it. It's the price leg that runs liquidity. this swing low into this hourly order block. So now I'm taking profit at 2 and content with that. So now you're looking at like a 1 to 12 risk reward on a day that we are expecting expansion most of the day. And these are the days that you just capitalize on. And that sets up for these days set up for like that's the reward for being patient is everything looks beautiful and you capitalize on those days. And so the days that aren't so good and aren't giving you the setups, you don't need to leverage anything on those days. You can watch price action, you can uh, lower your leverage if you're looking to trade it. But I mean, look at how the next days turn out. It's just another area of like, oh no, this is around the hourly. What do we get here? Close right here. Oh yeah, this does incorporate a day. So this is a very like consolidated area of price action. Same thing. Then we finally kind of get expansion up. So on the daily, it runs up, gaps up, runs up, comes back down. Okay, looking at this old high as an area of possible support. Back to the 1 hour. This is we kind of get like an afternoon. It says 12. Oh, here's the area of support. So, but this is kind of funky. Like on ES, at least, this is like not really ideal price action. It's like literally they're just putting in all these swing highs and swing lows to get ran back and forth, consolidating. Here's your move from here. Well, like, what are we looking at in here? Like, even this area of price action on the hourly, you could probably break it down to the 5 minute and maybe you can get like a good setup. Again, this is like, I'm talking about like what I look for order block, like logic and entries. Um, you guys might be fair value gap traders, just waiting for that fair value gap, silver bullet, that kind of stuff. So that's not what I'm looking for, like first and foremost. And so you kind of get this. This gives you a little bit of a range, but we can look at these areas along the way. This hits 3. This kind of gets up to 4. We're not up to 5 yet. But for ES, this isn't really. There's plays in here for sure, but this isn't like. I don't need to jump into this. Like this is beautiful. I need I need to take advantage of this. That's what you got to tell yourself. These days, I need to take advantage of this. These days happen. I don't need to be in this. It doesn't matter because these days are going to stack up. These days are your low risk with high reward. And when you start like thinking about it like that, then your need to trade every day, you don't want to burn yourself out and miss this day. That just makes you feel even worse. And you're like, dude, I've fucked around in this shit right here and I missed this. Fuck, this was easy. So that's why that patience and just watching the daily and how the candles are forming and how they act around that on the hourly and so forth. So I think and I've been watching Ben in the chat, and he's kind of running ES and NQ, and I think he's looking for like obvious setups on ES, and he's taking his NQ setups and then like kind of like jumping in like some of these ES plays too, where it's like, cool, I can hop on ES with either like another account or whatever, and take advantage of the same plays that this might be real obvious on ES and give you like an easy entry versus NQ. This might have been a little bit more like um, not as obvious and easy. And so you're capturing that, but you're using the same logic along the way. You guys have any other questions or any like specifics you want to look at and go over, and as far as like price action and like what I look for, or anything you're having trouble seeing, or
Whatever you already went through was pretty helpful to me, Aaron. So thank you.
yeah, you're welcome. Again, I think everyone's you know improved tremendously, and so I think now it's just going to be the discipline of sticking to your model, being patient when price action isn't friendly, capturing these kinds of moves because like these are the stuff like we have to capture that, um, and then just again just kind of reaffirming like price action, like what we want to see in price action, what confirms what we're expecting, what negates what we might be expecting. So if anyone has any specific questions or you want to go over anything, now's the
If
time.
no one else has anything, the only question I would have is on NQ's chart for Friday, where was the unicorn? Because I failed to see the bullish price action in the morning.
Oh, okay. So that was this little bit of price action right here.
Was it based off the hourly?
So it hit on pretty much all the time frames. So if we drop down to the 15, 15 was pretty clean. Um, Again, study, study this kind of stuff. These wicks put in here, and it's not like a very clean setup. This doesn't give me, even though this is ran, this isn't CSD. So I should expect this to be ran. This candle body runs it and then CSDs it. Okay, we get a deep retracement. That's pretty deep, and that usually I have my stop at the bottom of the body. So I would have got stopped out on that if I was trying to go long, like in this candle. That would have stopped me out, and I probably would have seen this, and I probably would have tried to hop back in right here, which was still in this candle body. Um, but we'll just draw this out real quick. So that's your price action for the unicorn setup. So we get a low put in, a swing high, we run the swing low, we CSD, expand higher.
Is the doji the order block? The failed bearish order block?
Which doji?
The one with the top of the trend line on the left that you just drew. All the way on the left. Yeah,
This?
that guy. Uh-huh.
Yes. So that is just a swing high put in. So that would be like your breaker for. a unicorn. This is just a price action model that for the unicorn setup. A low, a high, that low gets ran. Price expands above this high and other ones, comes back down to it, and we can see that, and then expands above here. Now, the expansion was only into this order block, okay, above this high, and there was nothing after that, no continuation, because overall um, overall price action is bearish. So if we go to the hourly, we can take a high, expands below, eventually comes over here, expands lower. This is the same setup. There's a small fair value gap in here. It's not it's not super clean, but this all these unicorn setups are really are order block setups with a fractal of time frames mixed. So all-time highs taken. I don't know where that's at. It might be this might be this line that I have. No. Okay. This candle takes all-time highs. Jacks, we come back down here. We pop this high with a candle body and CSD it. Order block at a higher time frame level. Okay. Looking at this unicorn setup, it's the same principle because it really boils down to an order block. Okay. So again, um, part of my mistake on this day was I wanted to see 50% of this get tapped. So I had a sell limit at 50%. I didn't get that. I think it IOFD this candle body. Okay, so that's again the you risk trying to get the premium entry. Sometimes you don't get it. So I missed that. And then I like got in somewhere like right here. But that's all this was. High, retraces, takes out that high, expands lower, comes back up to the breaker, which is an order block, boom, expands down. Same principle right here. And you can almost see these on the hourly. And
Is that a breaker though? It just looks like an order block to me.
it,
Because the it needs to have the it needs to have the order block ran.
so like when we talk about breakers and order blocks and all that, like a breaker is just like a swing high that was like an order block's going to be around it. Like all these things are fractal. So this hourly order block, like look at this wick. This wick is placed here for it to get ran again. We just ran all-time highs, but we need the second run on liquidity. So what does it do? Oh, it retraces heavily and gives a nice big wick right here. Retraces all the way back down here, balances this range. Why does it balance this range before running this high? What should we expect at a higher time frame point of interest after this high gets ran? Expansion. If this is already balanced, does it need to spend time balancing along the way down? That allows it to expand all the way below here. Just like we saw in the daily when I showed you the daily was balancing itself on the way back down to that order block. And then what did we get out of that order block? We got expansion that just moved. It ran because it's already balanced. This is the same principle on the hourly. So if I broke this down, the a breaker is just a bottom of an order block really. That's all it is. Like this breaker that we showed on the 15 minute, okay, what happened right here? We have a swing low put in on the hourly, okay? Price comes back up and now we break that and then we drive above it. So on a lower time frame, look at this wick, how it comes back down and comes all the way back up. Well, what happens? This opens, this runs the high of the previous candle and comes all the way back down. 15-minute it CSDs and drives up. So all we're looking at on the hourly is a low, a swing high, a lower low, expansion up, return to that swing high, which you could qualify this as an order block because it's this candle's taking liquidity. And what we had over here was a 4-hour order block. I could use this one, although I don't like this setup in here. And I think it's like that because we're probably going to run those lows. So it doesn't need to have a clean setup as if it's going to hold price above this level.
Yeah, that's why those equal lows right there, um, just below that, just after the order block or at the order block too is why I say that one's gonna fail.
Yeah, this is great stuff to identify as price will come back down and take out this low. This long wick right here, this is going to get ran. This is put here on purpose. This set of price action, the way it's not clean for this hourly uh, bullish order block, it was temporary for this. Price runs back down into it. Remember, we get this, but we don't get the continued follow through. But that was your on the 15-minute. That was your like it's just whether you get expansion or not is dependent upon higher time frame order flow. That's it. This was just the expansion to take out this high. So this was a nice candle to take this unicorn setup from here to this high. That's a beautiful intraday trade with the logic being we put in a low, we created a swing high, we took out that swing low into a temporary order block for the time being, expanded up, came back down to that swing high, and then expanded out of there to the liquidity that was purposely put in right here with that wick. And so just like it's not always going to be those beautiful like um where are we at here? Let's see. It's not always going to be like this and then really expand. Like lower time frame, this hourly wick, that's a swing low on a lower time frame on a 5-minute. There's a fair value gap right here, okay, which is a draw on liquidity for fair value for selling. There's an order block in right here. We just ran, what did this candle do? It just took liquidity into a higher time frame area and CSD'd it. Order block confirmed. It's still the same logic though. So like that's the only part that I feel like ICT didn't go into deep enough is that we have to identify that this run on liquidity right here is just this happening. Yeah, it might not look like separate, completely separate candles where you get like these nice, um, like an hourly swing high, then the hourly decides to go lower with multiple candles here, then multiple candles run up and then expands and comes back up. It just might be this on the lower time frame, but this is what it looks like on the hourly. And the logic is still valid and you have confluence. So the examples he shows in a lot of his videos are like the really nice looking ones. And they're easy to see when they're nice looking. But you will miss these plays if you're looking for it to always look beautiful. Everything's going to be risk reward. If the logic is there, like mechanically, then ask yourself, are you willing to accept the risk of going short at this area right here? I think that's pretty good after we ran highs and put in an order block. To me, this is a good area to take risk on taking shorts. I especially like this. These crazy long wicks on the 1 hour, those are, just those purposeful areas of liquidity engineered into the price action. Equal lows, another long wick, another long wick. This see, this should have never been here. If we were going to continue higher, this wick should have never been here. That's not how like CSD with continuing bullish price action works. And I would say go back and check out um, a couple days of bullish price action and where you get bullish moves, consolidation, bullish moves, and look at how the CSD plays out. So I want you guys to see this kind of stuff and start uh, thinking ahead of, okay, price is eventually going to come back down here. Let's wait for the logic to happen. And here's the logic: higher time frame, boom, back up, boom, respecting order blocks.
Also, the when we broke all-time highs, we created a new daily EO, and if you read price from there, it's pretty interesting. Sorry, it was the hourly. That was it. It was on that chart that you were on.
Oh, let's go back to the hourly. This action right here, this is an EO candle.
Yeah, that's right. The three candle swing high forms the new EO range, and then if you put a PD array on that three candle swing high, see what that looks like.
Nice little tap into 50%.
Yeah, so as price comes back up to that range, which is technically a balanced range,
Mm-hmm.
it does, you see where price stops in CSDs and continues the bearish delivery.
Yeah.
And all price has to do is tap that blue line, because that blue line is EO, so that's fair value. So once fair value is taken and they rebalance price, then that frees price to CSD and show its hand go where it wants to go.
Yeah.
Hey Maddie, do you draw that for any three candles setup?
I usually do. Like I'm looking at like a swing high that contains an EO that's not run. And then you can look at that as like a reversal point or a potential, like if it closes above 50%, then you could say that the high is likely to get run because that represents liquidity. So I'd be bearish until we get like a close above that swing high. Like the swing high that was made whenever we took 50% of the EO.
This swing high right here.
Exactly.
Yeah. And that, yeah, that all, dude, it's cool because like all this logic just like all falls in line with each other.
Oh, exactly. I just wanted to point it out because the EO is easy to not pay attention to, but especially when we start running out liquidity on the higher time frames, like the EOs can be pretty insightful.
So pay attention to the 3 candle setup, and draw the range around those candles at higher time frame points of interest.
You need narrative behind it though.
Oh yeah, yeah. See, I'm just not familiar with the EO, so uh,
Uh,
kind of.
yeah, I would say uh, like this, the EO logic, all this
It's
logic,
range.
all this logic is range logic. It's like it's all combined. It just depends on how you want to be like mechanical with your setups within that, because it's all like dealing ranges, imbalances, liquidity, and dealing ranges. That's all the market is. These are various forms of how to understand that logic and make trades based off of that logic. So whatever you can grasp is is what's going to be most beneficial for you. Like I know me and Matt have taken the same trades, and Matt's used like nothing but like EO logic, timed EOs, and balanced ranges and time of day. And I've gotten in the same trades just using order block logic. It's all the same. It depends on how you want to process how you're going to take trades. Because the candles are going to print the way they're going to print, and it's all combined. A fair value gap trader would say, well, yeah, I entered in this fair value gap. Duh. This was a fair value gap in the premium section of this dealing range right here after we had a market structure shift. And so I waited for OTE in this fair value gap and traded it. And my stop was way up here because this is the fair value gap candle. That's the logic he's going to give you. Is that person wrong? Is that person not like taking the same trade that I take as an order block that Matt takes as an EO? No, it's all the same trade. It's all the same logic. That's why, we're telling you guys like find your model, stick to it. If you like the way one person does things, do DM that person, go one on one with that person, and pick their brain about the logic of how they trade. If that's what you like and you say, I can do that, I want to get better at that. Because I know everyone here is successful taking trades, and there's probably 5 different to 7 different trading styles and models that people use to take the same trade. There's that, like, what is his name? D Dodgy on Twitter. All he does is inverted fair value gaps. That's it. Here's his trade right here. Here is his logic Friday. Yeah, I just take this inverted fair value gap and look at right to 50%. Stop above it. Money. I could say this is my order block trade. I have a candle that ran into this fair value gap and CSD'd it. Order block. On the 5 minute, there is a confirmed order block on the 5 minute here. There, there's other things that you can use for the same exact trades. So To me, that's like first and foremost. Find whatever logic you like, and like, dude, Matty will run like really good one-on-one with EOs, timed EOs, uh, the opening range, the London close range. Like, go for it. If you wanted, I trade order blocks. That's it. It says right here. I trade order blocks. That's my reminder to don't fuck around with trying to trade 5 different models. Stick to that, be successful at that, and then add in the future if I need to. I think like NSG has some like dealing range logic that he likes to trade. You know, a lot of people do. So if you're don't confuse yourself by like starting to mix in like 5 models at once. That's the biggest thing I would say, like as of right now, as how early we are as traders, and we're only like a year and some change deep into this. Like just find one and like start to master that. And then find, like I said, pick the person that does what you like, and then just ask them to do, a one-on-one and go over stuff to help shore up the ideas in the process. There's this Discord we have. There's so many good resources and so many uh, people with dialed in trades and logic and able to break it down. That's like the one benefit of our Discord, is that it's like one big like think tank, and you have people that do different things, and they're starting to become like really good at them, and you can use them as resources.
Yeah, well said, brother.
Yeah, I like EO stuff for like targets. That's kind of like my extent to like what I use EOs for. Like if I find EOs that haven't been ran, like those can be like intraday targets for me.
Right. Yeah.
I'm not as good as you, Matt, on like the timed EOs and all that, because I just haven't put in like that time. That's like, you kick ass with that stuff.
Yeah. Really, for me, that I don't trade with EO other than the timed EO, but I just noticed this because like I just wanted to point it out because like sometimes range theory and like understanding where new deliveries begin and then whether or not that range is balanced and
Mm-hmm.
then what happens at 50% of that balanced range is just a really easy way sometimes to like get a handle on what price is doing.
Mm-hmm.
So and it exemplifies here, right? Whereas like
Yeah.
we close above, we create a EO range swing high, we CSD, we come back into a other range, and then when we return to the new range, it can't close above 50%, right? And so like that's some real basic if this then that logic to
Yeah.
kind of help with like what's happening in this current range of price, right? Like
Mm-hmm.
are we respecting 50% level or not, like because really what I'm looking for is like are we are we going to attack the high of that order block, which represents like a 3 candle EO swing high,
Yeah.
right? And so like that's my liquidity target. If we can close above 50% of that range and show that, hey, I attacked 50%, but I still want to keep going higher. That's when you can start to help identify like, okay, is the liquidity the failure swing we just took, or is it going to reach and take out the high of the order block and continue bullish, right?
Yeah.
But
Yeah.
yeah, like not necessarily treating that as like an entry method, but more of a method for understanding like um, where price could possibly go.
I I think that this should be a good entry method though, because like the little um, stuff I've listened to from TCM is like you would expect it to return to here, and you should start looking for entries at 50%. And then he takes his
You
like
definitely could.
sets his stop loss like above, right above there.
Like if all your narrative is like I'm bearish and that's how you want to view look at the market, then yeah, you're right. You could formulate an entry there, and you would formulate it like that. But on the other way, you could say, okay, the candle that takes 50% but doesn't close above, and then that next candle, CSDs,
Mm-hmm.
right? And then what happens on the very next candle? We get like almost an immediate rebalance. So I would be looking for an entry within that immediate rebalance wick
Yeah,
after that candle closes below that. You see what I'm saying? And so that tells me, okay, well, now it's going to target a failure swing or the lows,
yeah,
right? And sure enough, look at the lows. It's real wicky, and
yeah.
so it's
Nice failure swing right here.
yeah, like it's the Mohawk lows, right? That's what we're looking for sometimes.
Yeah. So I think honestly, um, because that's what like I remember NSG going over that. I went like did a one-on-one with him, and he was talking about this, and he was looking for that same thing. Um, that's your scalable like entries of how aggressive do you want to be? Aggressive, this has more confirmation, a little less aggressive. You just don't capture as much, but it's more confirmed with a clear now, like more another added layer of like confirmation. So that's your everyone's like risk tolerance with their leverage. Most aggressive entry, a little bit less aggressive entry, more confirmation. That's kind of how I look at that stuff now. It's like um, if I don't like the way things form, then I'm looking for like a less aggressive entry. So like for me, this high right here, this candle body takes out these highs. This wick takes out these highs, which grab this liquidity above here back into this order block. This CSDs, well, it CSDs these two candles. I should be able to grab an entry right at the bottom of this candle. Same order block theory that I've been using. Now we have this order block got respected, another order block put in, less aggressive entry, more confirmed entry. So same thing, it's just how like your levels of basically every model is going to have a level of aggressiveness. And if it's more aggressive, you have less confirmation, so you better be like really confident and have your stop set. Or if you're a little unsure, then you just wait for, and that was two different like theories, but now it did the same exact thing. Where Matt would have taken a more confirmation entry for me would have been in that same area. I just find that's interesting how like it all kind of like plays out similar.
Yeah, 100%, bro. It's crazy how all these different models can all like logically work together,
Yeah,
right? And price, works within those frameworks, right? But
yeah,
yeah, like you're saying, and the great point of just you've got to find something that resonates with you, and like the core of it, like you're saying, is like we're all looking for similar things. It's just a matter of what is easiest for you to identify, and then how do you build your execution plan around that?
mm-hmm, yep, yeah, exactly, man. That's the key takeaway. I think what you just said, building your execution plan around it.
And then follow those rules.
Exactly. Anyone else have anything they want to add, share, ask? If not, I'm probably going to be winding it up here shortly. I think we've been on for 2 hours now.
Yeah, bro. I think you're ready to sleep for a couple days.
Nice little chunk of time. I got a soccer game for my daughter in about a hour or so. So that'll be my afternoon.
Nice, man. Good luck with it.
Thanks, bro.
Hey, Sensei, any chance you recorded the top half of this?
Yeah, the whole thing's recorded.
Lovely.
Yeah.
Cheers, man. Thank you.
Yeah, you're welcome.
Yeah, thanks, Aaron. Appreciate it, man.
Hey,
Yeah.
Aaron, I had a question. Are you kind of just like on order blocks right now, and that's it?
Yeah, that's probably like 90% of what I'm looking at. Um, every once in a great while, like if I miss my order block entry, I might look to get into like a fair value gap or something. But yeah, I'm pretty much just sticking with order blocks.
Do you have a cutoff on a time frame
For
to see them?
oh, like what time frames do I look for?
Yeah, like I'm sure you're not, 30-second order block is not moving the needle for you.
Oh, yeah. So um, ideally, 5 minute, because I just think the 1 minute sometimes gives good entries as far as order blocks. I think the 5 minute is probably the cleanest. Um, and so that's kind of what I stick to. I've kind of been dabbling in the 1 minute a little bit lately, where just trying to see if I can take the same logic and apply it just on that smaller time frame. But um, yeah, it's basically the 5 minute chart.
That's interesting. There's a part of me that, sorry, I've obviously dad, toddlers. The kind of getting interested in going back to some basics, going back to an EST chart, going back to order blocks. Kind of what I think it was Maddie speaking earlier. You just know so much now. You can correlate in real time. Or like, oh, this is an EO starting point. Oh, look at that. It's coming to this point. It's funny. It's all hitting there. You can start to blend these things together.
Hmm.
Kind of like have you in my head, like, yeah, but you still need a model, dude. 'Cause if you don't have a model, you can't have daily risk. And if you don't have daily risk, then you're not really trading. You're just pushing buttons.
Yeah, exactly. And again,
100%.
just pick the model that works for you, and look for your model within those blended concepts. So like if you dig the time DO things and you have a model that works around the time DOs, whether it's like a silver bullet trade for a fair value gap, order blocks, whatever it is, just stick to that. And yeah, you're not going to get it every day, but at least you're going to be able to identify it, and you're going to have a determined amount of risk every time you take a trade. And that's the key to moving forward.
Agreed. Yeah.
If your risk is always up and down, today I'm going to risk this, tomorrow I'm going to risk this. And I know that with 5 micros, my order block trades, really the maximum risk I take is probably $300. But usually it's about $200. I know that. So I'm willing to risk $200 for a 1 to 5 risk reward play. So at least it's my risk is now like completely defined. And I'm not like, oh, today I'm going to trade minis. Like it's right now it's 5 micros every single trade until I can reach a certain amount of capital that allows me to now increase my risk.
That's the way to do it. Because if you're not doing the math on the back end and the front end, like I always say that term, you're just getting high in evals. You're just buying evals and you're getting high. And it's one of my biggest crutches. Like I'll go fuck around in eval and I think I'm a genius. It's nothing to do with being a professional trader.
Oh yeah, we've all been there, dude.
100%.
I've done that so many times, and then it just got to
Get
the
up
point
here
where
and you
like,
get up here and you slap down a save 90 eval. You're fucking the
I'm telling you, man, like discipline is so difficult to build in this business. Um, and it's really difficult, right? Because we all understand the need to be in the market, to watch the market, to gain experience, to learn, to understand and be in a trade, to kind of understand what that feels like. Because you've got to, we've all been through a lot learning how to trade, right? I don't have to explain all that to you guys, but the point being is like you've got to be able to develop the consistency, because if you don't have the consistency and at some point you don't say I've learned enough, I've got to just become more efficient at what I do now and pursue that with the same level of pursuit that you took when you were trying to learn everything. Like that's what's really going to allow you to develop confidence in what you're doing. And kind of like what Aaron's is saying, like he's got what he wants to look for, what he wants, and that helps him build confidence, because when he sees it and he's right, he can feel good about that. And then when maybe when it doesn't work sometimes, then at least he knows like, okay, I need to, what happened that I could have seen to help me realize that this trade was invalidated, right? But it's that nuance that takes time to develop. But if you're not sticking to a consistent form or factor of trading, then it becomes really difficult for you to reconcile how to become more efficient, more consistent.
hmm I would behoove you to really like if you have a moment in time where you're just pressing buttons and you take a couple losing trades in a row after you've like taken some trades with a winning model, I would like behoove you to just sit and like actually think about how you felt following up those losing trades, trying to take a winning trade with your model again. Did you gain confidence or are you second guessing yourself? And so by deviating away from the model, you're building up experiences that are going to make you second guess yourself and your model because they're losses. By sticking to the model, you've accepted the risk and you know that there will be times where this model appears to be the model and it doesn't play out and I lose. That's okay. I can accept that risk. But how do you build that confidence if you are deviating away from that? And how does that make you feel after you've deviated away and then trying to come back? Are you slow to come back because you're nervous, because you're uncertain? So I remember ICT talking about this like early on when we were listening to him. You want to build as many positive experiences as you can to keep building on the confidence. And so that when you risk a certain amount and the model just happens to fail that time, it doesn't break that confidence. You're still confident to get into the next setup that your model presents with the same risk and the same expectation that this is going to work out. You want to build that framework in your mind.
100%. And in line with what you're saying here is like we're humans are smart people. We're smart, right? But we're also very dumb. And so like whenever you do things over and over again, your brain has a hard time reconciling like what the result was versus like how that result was achieved. So when you're creating your model, you take a loss, you follow it up with other trades that may not fit your model, and you take additional losses. Your brain and your body don't realize that your model didn't cause those losses. So you lose confidence in looking and taking that model. And I don't know if you guys have recognized this in yourself when as in your journaling and things like that, but um, a lot of times and that's the whole point of journaling, is to explain to yourself what happened. Like, you got to tell yourself what happened there, because like the body's very straightforward like that sometimes. Like, your brain doesn't know the difference between like reality and what you tell it, right? So whatever you tell your brain and believe is what reality is going to be for you, right? So if you're taking trades outside your model and you're taking losses, you're going to have to reconcile that, internally, as far as like not having that impact your confidence in your actual model. But yeah, just wanted to bring that up because that's something that I've felt has helped me a lot, is trying to separate out, like, w- understanding like when I'm wanting to take an entry because it's a model versus wanting to take an entry because it's similar to my model, but I want to take a trade because I'm trying to make up for a loss, or this or that. And like, being able to distinguish those moments in your trading is going to have a huge impact on your bottom line and your consistency.
Well said.
All right, let's end it there so that Kaizen can post the video and I can watch what I missed. No.
Right
Hey
on.
guys,
Yeah, great job, guys.
can you guys hear me?
Yeah, what up,
Yes.
Addy?
Sorry I missed most of this. Been installing cameras all day. Um, we recorded it and someone can post a link to that. That'd be awesome.
Yeah, I got it recorded start to finish. So as soon as we're done here, I'll start downloading it and upload it to YouTube.
Awesome.
Yes, sir.
All right, fellas, I got to run, but really appreciate it, Aaron. Thanks a lot.
Yeah, you're welcome.
You guys have a great weekend. We'll see you all Monday.
Yep, everyone enjoy your weekend. Thanks for hanging out, and we'll catch you guys later.
Thank you, Aaron.
Yeah, you're welcome.